looking past all this euphoria, what do you see in the next 1 year, 5 year, 10 years, specifically for the lower mainland? Not the, let's be a little selfish for those of our listeners and viewers here in the lower mainland. What do you see?
Yeah, that's a tough one. I think that I mean, so much of it now, right? As well. I think it's like we're seeing like global asset prices basically all kind of follow each other, right? The stock market sells off, you usually see some weakness in the housing market, and yeah, I think everybody's watching the Fed, right? What are these central banks going to do? And it's don't fight the Fed kind of thing, and it's I think if we I think over the next year, like I think it's probably likely that you're going to see yields push a little bit higher. If the mortgage rates go from where they were from 1.5 to now they're at 2.2. Let's say they go to 3. I think that you're going to see a pullback in the housing market. Um, but if rates remain subdued, sub 2.5, I think that's bullish for the housing market. Just because people are going to be reaching for yield. And so I think that will provide some. But again, I think it really just hinges on what policymakers do, what central banks do, where rates are going to be. My personal opinion of rates is that while I think that we're going to see some inflation over the next 12 months, I personally think it's a little bit more transitory. I just think that we have so much debt, the demographics aren't great, and technology. I just think we're still in a longer term. I think we're in a deflationary environment, and I don't think that anybody has the stomach or the ability to actually meaningfully raise interest rates. So that's my personal opinion. It's so hard to say, right? I mean, everybody's trying to guess inflation, deflation, what's going to happen, and I'm still in the camp that while we'll have inflation in the near term, um, I still think longer term we're in a deflationary environment.